Oh, I'm very worried. I'm a tech fund manager, so I can't really raise cash in a mutual fund and or go into something that's not in the sector. So what I'm playing with is, where do you want to be? And with this news on Huawei and the increasing battle between the Trump administration and the Chinese, I have been forced to, even though I like some of these stocks a lot long term, really pare back my exposure to the semiconductor industry within the tech sector because they're most directly implicated.
So, Paul, even if you have a long-term horizon here, and I don't know how long-term your horizon is, but is it because you don't have enough clarity on whether this goes a quarter, a couple of quarters, a couple of years? I mean, these stocks have come down a lot. I guess I'm asking, why not buy them at some of these levels, or is it just because you have no idea what the real value is now?
Well, typically my shtick is I'm a tech value investor. So, quite often I'm the contrarian in the group. But the problem is I need to see some sort of light at the end of the tunnel. And I'm hoping, as you said, Kelly, that it's not a multi-year phenomenon, but I need to see something that gives me a sense that maybe it's at least a intermediate term solution. And I just don't see it.
All right. So, John Rutledge, give us the smart take here. Are we talking quarters? Are we talking years and then some?
Well, Kelly, I worry, as Paul does, that what started as a trade war now has elements of a currency war in it, with what we heard Mnuchin say, a tech war with Huawei, ZTE, and the chip suppliers, and a Cold War now that the NSA and the neocons have gotten in the act. And so this is something that has gotten much more serious, really, in the last couple of weeks. And it's the growing influence of the China Hawk group that did it. Now, what's interesting is that, to my knowledge, that group does not understand currency markets or very much about trade. And so we have basically a U.S. versus China situation that is not good for anybody in the long term. As Paul said, you can't run a business or buy a stock unless you have a way of seeing pretty far into the future. And when all you see is two elephants in the room smashing into each other, I don't know how you do that.
John,
bad for capital spending, bad for markets.
Okay, before I bring Steve back in, and we have seen some damage, like in the market surveys yesterday, where trade brought that almost into contraction. You mentioned currency real quickly. What do you mean by that? Because some are wondering, is the drop in China's currency going to blunt the impact of raising those tariffs on U.S. buyers?
Of course it does, and that's the most misunderstood component of the inside the administration group. The RMB is not a convertible currency. Now, write that down on a notepad, folks. Not convertible means that Chinese people are, in general, not allowed by law to own foreign assets. That means there's no such thing as a market-determined price. And, of course, the trade balance is a terrible measure of it. The RMB moves around when capital flows move around. Foreign investors put money in China, the RMB goes up. That puts liquidity in the Chinese economy.
Yep.
They tighten their reserve requirement. Just the reverse recently. So when the RMB goes down, it's not because the Chinese government has been somehow manipulating it down. It's because foreign investors don't want to put their money there. And there's no way a U.S. policy from the Treasury is going to change the behavior of our own currency investors.